options. It gives us a directional read, but it's not a direct directional read. And we've just got to make sure we understand that these things can go a little bit offline for a wee bit of time. But generally, as a rule, if components are going up, I am a seller, strong seller of equities. So when we look at component vols as a relationship, I'm a strong seller of equities. Now, I normally have this as a positive correlation, of course. So when I'm looking at my bigger picture equity chart here, obviously we've got a few days on our screens here. This is the NASDAQ. Now, one of the things I'm going to be looking for, of course, when I look at things like the NASDAQ is day session highs, day session lows. This is the best place to look for component pieces of information, right? Day session highs, day session lows. If I look at the day high from Monday, and I ask you, what would you be doing with the day high on Monday? You tell me what the components tell us we should do for the day high on Monday. Tell me what you think. You'd be annihilating the short, wouldn't you? This is a positive correlation, at least it should be. So when we see the day high on Monday, you're looking at that saying, my God, this is crazy. This should not be allowed to exist, right? Should not be allowed to exist from the US Open. Well, it did. So getting short into that to me was a no-brainer. We could hedge that out with the dispersion hedgers if we wish to. And if we look at the same thing from the day before, you can see that there was a massive buy reversal coming in here from the Thursday. And obviously, just by doing the same exercise, we were able to look at this as a probable buy trade here for that first rally there, which was brilliant as well. Right, so you can see that it's not a cherry-picked example. You can look at day after day after day after day, and you can see these massive macro trade ideas just coming in from the components. So a massive buy trade in there, a massive sell trade in here. Well, I'm getting to the point I'm going to make, right? The point I was going to make was, what would you be doing from yesterday? So here's Tuesday. Are you a buyer or a seller, guys? Tuesday. You're just selling stuff, aren't you? You're selling as much shit as you possibly can get your grubbies on. You're just sell side only. Do you agree? You're working hard on that short sell into any type of big macro buy side liquidity areas. You're looking to try and be in that short sell. Well, let's take a look at today's market. You see it? It's been sell side only for that entire few days since the beginning of this week, right? Since the beginning of this week, it's been sell side only. If we look at it this morning, you can see there was a little response here to the buy side, but immediately snapped away again into the macro sell. Remember, this is a macro trade idea. If we take it down into the micro charts, you'll see that initially it was relatively bullish, but then as soon as that sell came back in, it was gone because the macro was sell side, right? So as soon as the macro lines up with the micro, guys, you want to hit this and you want to hit it really hard. And that's exactly what's happened here for that sell phase. And that's part of your dispersion narrative. That's where we start getting some of those dispersion trade ideas. Because obviously the idea of the dispersion trade is about that hedge. Now, it's not a directional bet on equities. It's a hedge spread trade on equities. But that selling that comes in from dispersion desks or buying that comes in is big enough to at least temporarily halt the market move. And therefore, we should be able to get that type of bounce that we get from the trade idea. You know, we're not always going to get the trade. We're not always going to get a swing that develops from it. What a lot of the times we get, however, is that at least that little stunted pause, and it gives us a chance to jump on board a very quick scalp trade. Worst case, a very quick scalp trade. Best case, possibly a complete market reversal on occasions. Bear with me, guys. Bear with me. Did anybody get the buy trade on the S&P off the big dispersion buy trade, 1512? We got a beautiful bottom edge there at 46, 47s. Did anybody jump all over it? Anybody jump all over it, guys? Somebody, please make sure you've jumped all over that one. I'll show you in a second. A crazy bit of business, guys. That was crazy good there. Started at 15.11 and it continued at 15.12, which obviously made it that little bit better. Now, because I was talking, believe it or not, I didn't get the bloody trade. Crazy stuff, right? Crazy stuff that I never got the trade on, but I did get it eventually on Ninja, just so that we could show you the timing of this, how good the timing of that trade was, guys. And this is the $100 trade, of course, we're talking about now at this stage. $100, my arse. But it really was. I mean, it was so easy as a trade outcome, guys. Let's take a look. Now, the whole point of the $100 trade is to give you, interestingly enough, a clue is in the title, $100. And sometimes it is just that basic idea of the scalp trade, right? It's not going to be a trade idea that you're going to be saying, well, we've got to swing this every time we get one of these. The idea is to get you $100 and get it tied away nice and quick, because sometimes, as I said, it's not necessarily a directional bet, but it is a hedge bet. Let's take a look at this trade here. Now, forgive my pricing, guys. I was late to the party. I know that. Boo fecking who, but I was talking to you guys, so it's your fault. But take a look at the trade anyway. Take a look at the trade. Do you see it? So at 15.11, we get strong bids from the dispersion traders, right? 15.11. So we can obviously start looking in the background and we can start finding some of those buy orders. Well, there was a big buyer coming in here from that 430 at 15.11, right? There, see that 430 trade there? So there's a buyer on my screens at that price. I can see them. So I've got a level that I could maybe lean against in terms of trying to find a buy opportunity. What happens, of course, then is we then see at 15.12, shortly afterwards, we can then see at 15.12, max dispersion bidder, and they're going to add bottom line liquidity on a scalp. 15.12, guys. Look at that. Look at that. Same trade, same price area, and all you're trying to do is grab a trade away from this. And if you're going to use the concept of that ratio narrative, the ratio narrative you probably could have used was just waiting until that liquidity was squeezed out there and then got long into that for that buy side pop at that stage. And obviously it's quite clear that the trade went way above $100 per contract, right? Way above 100. Even when I was late to the party, it was still way above $100 a contract in the buy reversal. I don't know if you think that's any good or not, you know, judging by the number of people typing in. I think one person saw it. And thank you, Simon, for the note. But yeah, it's a brilliant trade outcome, right? That trade outcome was perfect because we were then able to get into the charts, look for the buyer that we're trying to find. We're being told from our time in sales, right? So this is our time in sales here. This is like the best time in sales that's ever been invented, because it tells us what to look for before the time in sales happens. There is expected to be a bidder coming in from dispersion hedge activity, right? There's a bidder expected. It's not that the bidder's been. We're expecting to see this on our time in sales. You get it, Simon? So if we're expecting to see a bidder on our time in sales at 15.11, we can look from 15.11 onwards and look for the bidder. Well, there they are, right there. These guys do not buy across the spread. They buy passively. And obviously, if they're going to buy passively, you can obviously recognize that that little passive buyer's done pretty good business, hasn't it? What a reversal, guys. It's like catching a falling bloody knife. It really is like catching a falling knife, isn't it? Because that buy trade has kicked on rather nicely from that price point. And if that was your only trade today, would you be happy? If that was your only trade today, guys, would you be happy with that outcome? 5 contracts for $2,500. $500 a contract with one trade. Well, that's what we're trying to get to, isn't it? We're trying to get to the point where it's not just about the trade trigger. Sorry, guys, I'm coming to squeeze that right up to the point you can hardly see what we're doing. Doesn't make any difference. It's the trade that you would have had, though, today, wouldn't it? That would have been the trade you would have had off of those two trade triggers. You'd have been able to find the trade, and obviously this is a really bad price. As I said, I was talking about the other trades at the time. So I missed the entry on this, but I was still, knowing how good this signal is, I was still able to take the deal. Now, why did I still take the deal? Because we could recognize, of course, that there was still a sizable buyer in at this price area here. Do you see them? So I don't think I'm going to be wrong by taking the deal at that point, because I can still see the buyer showing up here, right? So with that amount of volume there, it was pretty easy that if the price goes bid against that, I'm still going to make some money. And sure enough, that's exactly what happened. We got a brilliant response to this. Anyway, oil, guys, in 10 minutes time, 10 minutes time. So I'm going to grab a coffee and then we'll get started with the oil inventory report.